Hi, business owners. Larry Evans here. Today, let's talk about the mysteries of the transition tax under Internal Revenue Code Section 965. Why is that important? It's important because there's a Supreme Court case that is currently under consideration. It's called Moore versus United States, that may give you a chance to claim refunds of prior taxes paid if the taxpayer in that case is successful. So, what is the transition tax under IRC Section 965? Well, several years ago, in order to pay for other tax benefits that they wanted to provide a different group of taxpayers, Congress and the president decided that they would impose a tax on the undistributed earnings of foreign subsidiaries. If you have a US company or you own a foreign company and it had profits overseas but had never sent a dividend to you, the government said, we're going to make sure that we tax all of that income right now, even though you're still not going to get any cash. And so many taxpayers ended up paying tax on a significant portion of earnings that had previously been deferred offshore. And one taxpayer, Moore, decided that that was not correct. Moore said, we did not actually realize this income, and therefore we want a refund of the taxes paid. So now that the case is at the US Supreme Court level and a decision will be coming probably no later than June, you may want to consider filing protective refund claims in case the taxpayer wins. The reason you want to file a protective refund claim in now is that you want to get it in as early as possible so that you can cover as many prior periods as possible. Some taxpayers elected to pay that transition tax over multiple years, and so a number of those years are still open. You'd have to figure out exactly where your income was, what the tax was paid, which years it was, and then get into filing a protective refund claim, which is a whole different animal and has to be specifically complied with under the IRS Treasury regulations in order to be deemed a valid protective refund claim. I can almost hear you saying, that sounds like a lot of hassle. Why would I do that? Well, the reason you might want to do that is that if, for example, you had $1 million of earnings in a foreign corporation that you had to pay tax on over some period of time, whether it be 1 year or several years, and your tax bracket is anywhere close to the maximum, you could very well have paid or are in the process of paying $300,000 or $400,000 of tax on that deferred foreign income that you still haven't seen a dime of. You may be wondering, why should I go through the hassle of this? Well, the reason is that if Moore is successful and you have filed a protective refund claim that covers as many tax years as possible, you stand the best chance of getting the full amount that you paid on that phantom income. In my example before, $300,000 or $400,000 back into your pocket rather than leaving it with Uncle Sam. So if this is worth looking into, I invite you to click on the link below and schedule a call with me where we can spend 30 minutes and walk through your situation to see what opportunities are available, not only in this particular case with the Moore issue, but to see what other tax planning opportunities and strategies may be available for you in the future.